Jamie here. Hope everyone's doing outstanding Thursday, September 4th, 8:57 a.m. on this fine morning. Talk really quick about the marks. Some names I'm looking at go from there. S&P futures markets kind of flat, right? S&P's up about 10%, Nasdaq up about 10%, small caps up about a quarter percent. So we'll see how today plays out. This morning was the weekly jobless claims and the ADP report. An ADP report came in slightly lower than expectations. 30, I think it was 30. Why don't I have this here? 54,000 jobs versus a 73,000 job estimate. So, well, some have estimates of 65,000, some are estimates 68. I nothing crazy, but of course it'll be spun that it's a continuation of weakness in the job market. Weekly jobless claims came in line, so all eyes will be on tomorrow's jobs report. I was putting on the watch list this morning. It's like heads are tough to make heads or tails, right? So if the jobs report comes out really strong, backward, upward revisions, unemployment rate stays the same or downticks like 4.1%, you could be like, oh, the economy is doing well. You shouldn't be cutting rates because we still have signs of inflation, right? And if you cut rates, that's going to stimulate the economy more and create this kind of situation where inflation is going to keep going, the economy is going to keep going, and then rates going to be lower. So it's going to be harder to control inflation going forward. So that's kind of like it's bull case maybe, but then bear case down the road. And then you have the other side, a horrible jobs report, negative in regards to jobs created, like minus 50,000 or minus 100,000, backward, downward revisions again, unemployment rate upticking like 4.4, 4.5%. And then you have that case could be also be bullish too, because Fed Chair Powell at Jackson Hole pretty much said the reason they are open to cutting rates now is because of the weakening jobs market, right? So that just says, oh, his thoughts were right there. The rationale was right, and then the Fed has their meeting in less than 2 weeks, and they'll cut rates. So that could be bullish for equity. So, it's tough to make heads or tails what will happen tomorrow. Ideally, I want to see kind of like I wouldn't call it a flat line, but maybe 50,000 jobs added, just similar to ADP number. Unemployment, maybe it upticks a little bit, like a 4.3%. And I think that's enough to quell both sides and then make the case, hey, okay, maybe to cut rates because there's signs that the jobs market is cooling. And I think that'll bode well, right? And you take a look at the probability of a rate cut coming to September's meeting. It downticked all the way to 85% at times last week. It's back up to like 98%. So that's almost pretty much a foregone conclusion, pending any crazy surprise tomorrow. And then also you can see the market, right? The yields, the 10 years down nicely. We got up, the 30-year got up near 5% at start of week. That's come down. So all things considered, well, we'll have to see. I keep saying, I've said this a couple times. Well, I'm like in cautious mode, right? And not saying that we're going to start to have enter a bear market or correction. I just think there's opportunity for weakness. So that's what I continue to play for. Also, I'm being cautious on both sides. So I haven't done much in regards to trades. I might not do much today, depending, unless I find some conviction trades. And once I get some conviction, obviously I'll be a little more aggressive like I have been over the last couple of weeks. But take a look at a SPY yesterday, 315. We were almost treading water, almost flat on the day, almost did a green to red. And then the magical hand comes in. And for no news, no catalyst, boom. I mean, from 640 on a SPY almost up to 644 in a matter of 45 minutes. So people who look at the headlines this morning will say, oh, the S&P was up 0.5%. Great. But it was chopping around. It gave back the gains from the start of the day. And, if the market closed at 315, you're like, oh, flat session. That's on the heels of Tuesday's rough day. So despite the rally yesterday, markets S&P is still red on the week. So we'll see what happens going into, with today and tomorrow. And then that trend I'm watching, the amount of stocks trading over there, 50 and 200-day moving average continue to trend downward. So yesterday, despite the rally, another 1%. So, only a couple handful of stocks ticked under the 200-day moving average. But again, the more charts I look at over the last couple of days, the more seem to be like right at that support. And it could just be consolidation before the next run. But to me, those are trends, right? The 50 and 200-day moving average, shorter, longer-term trends. You want to see those trends not resolved under those moving averages. So that's kind of the overall market. 637, that's kind of like the key spot. If we break 637, I'll be getting SQQ calls, maybe a little bit before that. And then if that happens, then 633 is that big line. I finally added an annotation on the SPY. I haven't added that in a month or two. That'll be a big spot. If that can hold, then I think all systems go. But again, September, historically weak weak month for equities, right? The only month that has a under 50% performance in regards to being green for the month. So heads or tails, it comes up on the tails, if if the tails is the market being lower. All right, that's overall a nice little headline here in Market Watch this morning. If the market loses faith, gold's going to $5,000. I mean, I always take the gold trade with a grain of salt, right? I mean, it is at all-time highs this week. But I mean, if you take a look at relative to the market's performance and where a lot of the gold bugs would say it would have been back in 2008, 2010, 2015, 2020, I mean, it hasn't moved as much. Maybe it does at some point, but the nice little headline Mark Watch saying that some of these central banks are piling into gold. It's at some point. It's like that headline. Maybe that marks the top for gold for some time. Not that I'm going to get some GLD puts just yet, but certainly always have my eye on that. All right, so that's overall market. Now just individual names. I was looking. So Google News after the close on Tuesday, and Apple rallying in the morning. So now I was looking possibly sympathy plays, and Reddit's a little more sensitive to Google moves. So Google market opens, Reddit's at like 226. It closed at 218 the day before. It's up like 2% or 2.5%. I look at the calls, I'm like, oh, they're up like 70%. So you're getting paid 70% on a possible event that wasn't priced into the stock. So obviously, if you got the calls on Tuesday and you're up 80%, you close them, great. But I looked at the 240s. I'm like, inexpensive on a risk reward basis with 3 days left to expiration. Sure enough, I take my eyes off. I go and get the Biogen Lotto calls, and then I look back and it's 238. I almost got some 250s. Thankfully, didn't. Reverse course. I'll talk about Reddit in a second, but tight pincher on Reddit. It's just such a tough one to trade. So I'm not typically the one that like looks at a trade and says, hey, I'm going to scalp it for 100%. That's not how I enter a trade, thinking I'm going to take some off at 100% and I'm going to ride the rest for multi-bags. So for me, trying to trade Reddit, if I traded yesterday, I'd be holding on at 238, right? After I'd lock some in, and then I'd almost probably ride it down. So we'll see. I might revisit that one. But Biogen, I was watching at the morning. I was talking about the biotechs on Tuesday as well. Relative strength compared to the market. And then it was rallying in the morning, positive collaboration news, and some other FDA rolling submission for their Alzheimer's. Just kind of like it just needs a kick in the butt. And that's what I've been thinking since the April lows. And then finally, over a 200-day moving average, hasn't done that in almost a year and a half. I have to go back to the chart. And then I was like, if it breaks for 145 or so, then it's 149 and change. The 150 is looking expensive as a lotto. Went and got those. Stock gets to 145, couldn't break. And then gives back the gains, chops around for the rest of the day, close out 1.4%. I still like this name for higher. I mean, ironically enough, 6,000 calls were traded on Biogen. 1,000 plus were on that 150 strike. Crazy stuff. So hopefully the market makers hear us and continuation. So if it does do continuation today, I put it when I put out the trade, maybe over 143, and it's 142 and change right here in the pre-market. I might look for some calls into next week or September strikes to play for a move up to 150, because I think it's like once this gets going, it's going to take off. Similar, there's other big mega cap names. I mean, Biogen, of course, there's patent issues and things that have caused some concerns over the years, but at some point, this one starts to take off again. So that's Biogen. And then Hood and Visa, they were chopping around in the morning. Hood was red for most of the day. Visa was red into the afternoon, and boom, the magical hand comes in. I don't know if I posted a chart, but Visa all the way from 347 to 350 in a matter of like 30 minutes, nonstop green candles, no news catalyst besides the market rallying. Still like those as protection and hedges. You take a look at Hood, it's under its 250-day moving average for the second session in a row. I don't know why I don't have the chart here. There it is. So, I mean, I'm not saying that portends a big sell-off, but I think it presents opportunity if the market has weakness. So don't be surprised if I get some strikes into next week if the market finds pressure here after the open. Same with Visa, still sitting at its 50-day, got down to it again for the second session in a row and bounced. Still watching that one for hedges. IIPR closed in the green yesterday slightly. My October strikes are still double. I'll continue to hold those. And it's kind of like I was saying yesterday afternoon on rant. It's like you buy when it's cold, you sell when it's piping hot. IIPR kind of got cold again after its move when I got those October strikes. So might use that coldness to look to get some more spec calls further out past the Octobers. Don't forget ex-divvy, right? So IIPR, I think it's $1.70 dividend. I think the ex-divvy date's in September, October. So that's kind of like priced into the options, especially as you get closer to the date. So it'll look kind of skewed. You're like, oh, why? Wow, the calls look inexpensive. And then you'll realize that the ex-divvy date's priced in. So it kind of skews those pricing. So you got to be aware of that. Oh, and then here's Reddit. So I posted this in the chat room this morning too. Look at this tight Bollinger Band. The last time Reddit had the tight Bollinger Band, it was earnings. And the day before earnings, and then the move higher. So I don't know if this is the next leg, but certainly something to watch. I think that's it. I'm trying to think of some of the other things going on. Oh, SERV Robotics, but I don't have it here. 975. Disappointing, right? Look, all systems go after that Wedbush initiation. 2 weeks ago. Looked like 12 was going to break, and then boom, the shorts come in. No news, no catalyst to speak of. So they use this kind of quiet time to pressure the stock. I Similar to what's going on with which one was I talking about? The quiet. I'm losing my thought process here. Oh, IIPR. Similar to the cannabis names and marijuana. It's another name that buy when it's cold, sell when it's piping hot. So I'll be patient here. Still have the October freebies. I have the September's. Who knows if we can catch a fire here. Still love the name. Nothing's changed. Let's have a great day, folks. I'll be back on audio later. Rock and roll.